Hi traders, welcome back to another trade recap. So in this trade recap video, I'm going to show you one of my newest Aussie dollar long position, closed out for about $25,000 to $30,000 in total across 2 accounts. So also at the same time to show all of you, I'm currently in Japan right now, and as you can see, I'm staying at one of the penthouse near Kawaguchiko, which is near Mount Fuji. If you know Japan, you know Mount Fuji is one of the hottest tourist attraction here. So without further ado, let's jump onto the chart. So if you look at the 4-hour chart, I took a long position on Aussie dollar. Why did I take the trade? The setup itself was quite simple as well. Recently, a lot of my setups has been really straightforward, and there's not a lot of tricks, a lot of thought process behind it. So when price started to fall really hard, my biggest question on AU was, hey, was it bearish or bullish? So if I put on the replay mode here, you can actually see how confusing in terms of the short-term versus the long-term price action was. We're in a range. Arguably, you can say, hey, Aussie dollar is in the range. We have the high around that 0.6791. We also have the high, the next structure high here, around 0.6761. So we got multiple resistance. So when price started to fall really hard, it fell really hard all the way from that fake out above that 67.90 all the way down to 66.40. So that's about 150 pips sell off. Price was technically still in a range. So when I start thinking about it, I say, hey, maybe Aussie dollar wasn't that bearish as what I would expect it to be. Because if you really look at this on the daily, this is just a range, right? It's just a range. Price had multiple attempts to break above that 67.95, but ultimately we still failed. So overall, judging from this, we can say, hey, price action is just messy. We're moving sideways. Price is piercing back and forth the 20 and the 50 EMA on the daily. That's why I decided to, hey, maybe Aussie dollar is just in the range, so I'm going to look for some range bound setup. So when price was around the 66.87, can I go long? I cannot go long because that's a bad flag. So the only area I can go long was possibly right here at that low or that low. So we also have another swing low point here. If you look at the 1 hour, we also have a swing low here. So why did I decide to go long here was because I gave myself 2 chance entry. First chance entry is at 66.43. Second chance entry was at 66.27. When price react at this 66.43, I saw that, hey, on the lower time frame, here we got some, if you look at the 5-minute, we got some falling wedge pattern, right? We got some falling wedge here. And if you look closely to how price react, we have a break under the 66.43. Then what happened afterwards was right after we get the break, if we want to talk about really precise, very detailed price action reading, that's the breakdown. That's the breakdown point, right? Broke under the 66.40, come all the way up. So right now, what I want to see is whether if price is going to hold above this minor structure. Can you see that? So we have a bounce, second bounce, broke under it, come back above, diving above. I want to see price hold above it. So my entry was based on that. Actually, after today, I saw price had that multiple attempt. If you look at, again, lower time frames, if you look at the 2-minute or even the 1 minute, 1 minute is a bit too low, but if you look at the 2-minute, we actually have multiple attempt to hold above it. And that's what made me to actually say, hey, I'm gonna go long here, stop loss under that low, and I'm going to let it run. And not long after I took the trade, when I saw that price created that first impulse wave, what I did was I'm not looking to overly manage it, but if you look at the 30-minute, how can I manage it in terms of trade management? We have a minor structure, and at the same time we have one here as well. So what I would do is I will manage it. It won't be a set and forget trade, as in if price really does reverse all the way down and get stopped out, I won't allow that to happen. I want to see price holding at least above the 66.49. If there's any 15-minute candle closing under the 66.49, I will be closing the trade. Whether it's in a small profit, small loss, or break even, I'm gonna close it. But guess what? right after I draw out that zone on that 66.54, which was that, if you look at the 30 minute, you can see clearly we have multiple rejections here. So right after I saw that price hold above it, beautiful trade. I was very eased, and I knew that price had a very high chance moving into 5 to 6R or even up to 10R. But the main reason why I decided to just close the trade at that minor structure, it was because I felt like, hey, I'm outside right now. I'm more than happy with 6.1R. I decided to just close it for about 25,000. Then right after that bounce, price technically just moved all the way into my target. So that's it for the trade. So if you look at the P&L here, you can actually see on one account secured about 18,000. I also posted it as well. Then on second account, I secured about $18,000. So that's it for the trade recap. Hope you all learned something new as well. Very simple mean reversion trade, anticipating price to actually reject a key turning point when everyone was actually turning bearish. I believe everyone's looking at Aussie dollar as a potential sell, but the way I look at it was a little bit different, and that's what made me being able to juice some profit out of this trade. So that's it for the trade recap. If you like the video, please don't forget to like, share and subscribe, and I'll talk to you in the next video. Bye bye.